you'll do a proximity analysis. So this house had a sale of 1.5 million. The nearest one to it should have that should have a greater impact to the properties nearer to it than the ones further up to it. So that is the first stage, which is a proximity analysis, and it uses other statistical derivatives, including variables that you would input, such as the condition of the property, the accommodation, and so on, which can easily get from a data sheet, input it in, and the computer software will run a model. Well, you have to create the model that will determine how much properties are based on these variables. The model is tested using two primary statistical tests. One is median sales ratio. Now, median sales ratio is very simple. It says it takes the value that the computer worked out, divided by the value that an appraiser would work out independently. So we take a few samples of a few systematic samples and go and value those individually, do a full valuation. And then we divide what the computer got by what we got, and that is the sales ratio. Based on all of that data, we then find the median sales ratio and see how much each property differs from the median. And we have to set a standard. So if the standard is, like for example, in Colorado in the US that uses this, the standard is 0.05. So every sales ratio for every property must be within 0.05 for the model to be accepted. Okay? If there are outliers, we can look at those outliers and see why they are outliers. And if not, then fine, this has passed that initial test. The second test is the coefficient of dispersion. After we compute the median sales ratio, we then subtract every sales ratio from the median in each one of the properties, and that will give us the absolute coefficient. And the absolute coefficient are then summed and divided by the median sales ratio to give us the coefficient of dispersion. And that again is another standard. So for Colorado again, the standard for vacant residential land is 15%, and the standard for improved properties is 20%. So once as we have a coefficient of dispersion within those standards, again the model could be accepted. And that is how, once as the model passes these two major statistical tests, then it is applied to all properties. And the tax is then based on that valuation. This is the GIS that is used for that, where they had all the properties, and of course they have a coordinator, some spatial reference for it. So anybody would be able to go online, click on their property, and see what the computer-aided mass appraisal would have generated as the taxable value of your property. Again, that way it increases the level of transparency and also public buy-in. Now remember I was talking earlier about property tax being a specific instrument for local government. This is how the revenues in Europe were used towards local government, and as you can see, as low as 3% in the Czech Republic, but in Great Britain, their primary source of revenue for the local government institutions is property tax. Probably because they charge £1,500 for the standard property. And then more than that for most. Right? So all of their revenue comes from property tax. Alright, so just so that we bring it back home, I'm going to look at some regional examples. As I told you, I'm not touching on Trinidad, right? My partner is still under the bus there. We'll be dealing with that. So some regional case studies. Now, the ones that I'm dealing with today are Grenada, Barbados, and Jamaica. But just to tell you informally about some of the others, as I told you, Antigua uses depreciated replacement costs, and as my colleagues here said, that most likely is because they have no values with the appraisals. Right? St. Lucia is a nice study to look at, but I didn't get the time to really put some good evidence here where they had that tax reform in 2011. And that's something I think we should look at, especially now that we are in the process of doing a reform ourselves, right? Or of implementing a reform that happened in 2009, to be politically correct. Right? So Barbados. If you feel taxes difficult to understand here, Barbados has a whole set of different categories for property. Alright, so they as well have value bands. Well, no, they don't have value bands, they have value categories. And the tax rates are based on these categories. So if you have anything left up to 150, up to 75,000 US for properties worth up to less than 75,000 US, they don't pay tax at all. Okay? If it is between 150 and 450, it is 0.1% of the capital value, and so on. Over 1 million, which is 500,000 US, it is 0.75% of the capital value. And you see that the rates of vacant land. All other properties, which would be the commercial and industrial, which I don't have that much of as we do, is 0.5% of the improved value. So they don't consider the land value in that case at all, which would make sense for a commercial building, which we would value based on its ability to generate an income anyway. Right? So it makes sense there to use improved value as the basis for tax advantages. They have a cap of USD $30,000, which is high, but still a cap that says they cannot on any property collect more than that. Pensioners who occupy, owner-occupied homes, for pensioners, they pay 50% by which the improved value exceeds $150,000. So they work out the improved value of the property over 150,000 Barbadian dollars, calculate the tax on that, and then half it for pensioners. Okay? So for pensioners living in modest homes, they're most likely to pay no tax when you look at it. There's a 50% concession for tax on improved value for hotels and 25% for villas. If you have a hotel or a villa, you get 50% deduction if it's a hotel and 25% deduction if it's a villa. And that is because of their drive for tourism, and they don't want to discourage the tourism market by these heavy property tax credits. Grenada, yeah, I know I'm boring you already. Grenada is based on capital value, but they have split rates. So they look at capital value of land only and capital value of building only. Right? And I say that in inverted commas because you cannot sell a building without the house at the side. And then there's a different story. So the classifications are here. Agriculture pays no tax unless you are not doing anything with it. So if you have agricultural lands that you are leaving idle to grow bush, then you pay tax. And this is one of the mechanisms that they have to discourage speculation. What's that? Yes. So these are some of the standards. Residential on vacant land will pay 0.2. If it has improvements, it will pay 0.2 on the vacant land and 0.3 on the improvements, which is the building. Jamaica is a nice example of what we should not do. It is based on unimproved land value, and I suspect that when they had that report, I can't remember what year it was done so conservatively so that they would have the public buy it. Jamaica is different. They will riot and will not degrees. So this is why they had this tax that was so conservative, and now they're especially views on Jamaica, now they're seeing hell with it. Because they now realize, okay, this really is not giving us any kind of serious revenue. So they have to move over to an ad valorem property tax. And the population is net. Now, if they had gone the smart way to say, all right, over time, let's increase it until we reach that target, and nobody would realize that you paid a little bit extra every year, but they just had it, that flat rate. I put the figures in US because I don't know if you can convert Jamaican dollars in your head. So between a little over 800 US, they will pay like $8 in tax per year. $8 US per tax per year.
Do you know what Jamaican dollars are?
And then if it is over that amount, they will pay the base rate, which is $7.77 US, remember that's US. Then 1.5% of the value, that's the vacant land value, over $1 million Jamaican dollars, which is $7,772 Jamaican, and 2% above that. There's discretionary relief for pensioners. So pensioners can apply to the parish council because the parish council is responsible for collecting the tax. To say that I'm a pensioner and my only source of income is the government pension and I can't afford it, and so the parish council has the discretion to waive the tax to pensioners in those circumstances. But it is not automatic, like it is in Barbados. Now, a good piece of literature would be UN Habitat as a publication on land and property tax, which is a policy guide And the FIG also is a good publication on implementing a property tax in a developing country, which is good for us here in the Caribbean particularly. And these are the 4 main recommendations that they had when you're looking at a developing country and putting in a tax. One is that the tax system should reflect and be sensitive to the local institutions and traditions. So that is the local market and how people interact with land. Now, of course, they give that for cases where you have social interactions with land. A good example of that is Tobago, where people have a family land system brought down from one generation to the next. And they don't have the capital view of property in the way that we do. So we have to consider those social institutions in order to have public buying of people who live in those type of tenure arrangements. You must have a fiscal cadastre or valuation rule, which is essential, which reflects the realities of all tenure institutions. So the fiscal cadastre must also reflect informal transactions in land as well. A big question, which I will not be addressing here, is whether or not you're paying tax based on actual use or designated use. Case on point Aranguez. Right? So the GLTN is saying the tax register, the valuation rule must reflect what is there on the ground. Careful attention must be paid to market conditions, and this is specifically where we have very volatile markets. If people are to view a property tax as something that is equitable and fair, in the same way that you're increasing the tax based on increased values of property, it must decrease as well in economic conditions and cause a decrease in the market. Okay, so we must be very sensitive and very critical about changes in market dynamics. So that if the local authority that is conducting the appraisals do it every 5 years, if there is a specific market event that impacts upon the property market, such as the global downturn in the economy that happened in 2008, there's a specific thing that happened at that point in time. The fiscal cadastre should reflect those changes in the market. Also, a country must make sure, especially a developing country, that it is administratively ready to administer a property tax. So this will include both the authority that is responsible for conducting the appraisals, as well as the authority responsible for administering the tax. Right? Both institutions must be well equipped with human resources, technical expertise, technical resources, and know-how on how the tax should be administered, so that when members of the public make inquiries, they can give informed decisions. All right? So that is the end of my presentation. Any questions on international and regional experiences? Yes.
I'm not surprised about the assumption that this is complicated. Because like the 1960 experience was based on the cycle method brought in Australia. And therefore, the Barbadians found out even before the Trinidad was implemented. Barbados implemented, and by the time they were ready to charge the tax, they realized that the money from site value was not going to be particularly remunerative, and they tried to incorporate improvements into the tax. So that to that some level of communication. Jamaica did the same thing. They implemented the Coates report totally, and then realized that, hey man, we need to tax the improvement, and therefore they were not happy. So that it's not surprising that they're totally correct. And I can say at one time was the valuation
Okay.
So that's the there's another thing that and you said something about Barbados, which I think was a simple example. You said improve value and then separate land and building and do. Improve value means improvement and that's what you can see there. And generally, I have discovered that the main strength of valuation rule for tax purposes is the record. And as my friend across here spoke about the geographic side of recording it, this country will not be paying land and building taxes for 6 years. And you will find in the next 10 years, there's going to be a tremendous amount of fraudulent land transactions. In my little world, I've already done valuation for 2 that are going to court. And I have seen at least 3 cases where the fabrication is obvious. And therefore I expect, because one of the strengths of the tax is that it keeps the owner of the property close to the property. You turn up every year to pay the tax. So you have a very good idea of anybody else having designs on your property. You're going to see the result of that very shortly. Thirdly, you refer to the question of area taxes. We've been doing that for 1991. 24 cents an acre when you park there. So now it's pretty much in the area that we've gone through that. And in terms of
Up until 1921.
yes, until the land and building taxes came in 1921, and you started taxing, and even so, you tax the land separate from the building. So you still have an area tax on land. And that's what I said, the city council has been running their land and building on a rental part. This is another thing that we need to look at. Because until Thatcher introduced the so-called property owning democracy, the majority of properties in Britain were rented. They were council houses, and they were rented. And therefore, basing the tax on a rental value was almost obvious. It was, it just couldn't go, because most of the properties are rented. It is only since the 80s when Thatcher came on and started selling out council houses left, right, and center, and this moved to the property owner. And then when she did that, she made the mistake that cost her a job. She went into wholesale. Absolutely no. That is cost her a job. Right? And now they're into this banding thing, which is bringing on a last comment I do, and that is mass approval. In your studies of mass approval, have you looked at the level of homogeneity of the buildings? Because if you go to London and you look down any street, you go in the first one, you go in the last one, you value the top. Right? I am afraid that Diamond Hill is not good. Though they were all built on the same floor plan, it's not going to facilitate you with mass approval and the mass appraisals. I think I need some
Okay, thank you. We'd like to hold up here, and again, any other questions, you can hold it for the last question and answer session. Right? And while we take a 10-minute break at this point, you can stretch your legs, and we'll remove the bus off of Esrick in the meantime, and get ready for the next presentation. Okay, thank you. Those of you who have not had your food, please collect it. Those of you who have already have, please allow the others to get it.